Good evening, traders, and welcome to another StockX post-market recap for April the 2nd. I hope you guys had a wonderful day and a wonderful trading day. For everyone that's watching today, these post-market recaps are designed to give you guys a daily education going over how we did in the mentorship room, giving you guys an idea of our transparency, showing you our trades, and the methodology behind it. With this information, you guys will be able to cultivate a strategy based on how we do things and give you an idea on how our STX modeling system is definitely one that is designed to give you a big advantage when it comes to trading here, okay? So as you guys may know, every morning I give out these morning market minute reels here, okay? So in that morning market minute reels, I actually shared a lot of valuable information on SPX here. So this is our SPX chart that I provide in my market sentiment report. Now, my market sentiment report that I provide here basically gives you an overview of the key things that you need to know about SPX. We give you guys a range from the top and the bottom of our key estimates of where SPX can go. Now, this is vital information. I am so confident that I'm able to basically give the tops and the bottoms that we have many key evidence points. So if you go in my room over here, I have basically receipts of all the times that I called the tops and the bottoms, and they're all there, okay? So this gives you a big idea of knowing what the key market range is. And how do we get this information? Through my proprietary trading model. I look at various gamma levels, analyze ranges, and come up with a key determinant in terms of where the market range is going to be here, okay? So today, as many of you guys may know, SPX basically opened a lot lower. We opened under 5,200 and the market was down 30, 40 points. Now, we weren't too worried about this, okay? Because first of all, most of our positions were puts in the first place, right? So to give you an understanding here, this is our scorecard over here, okay? So we had basically a bunch of puts. We had puts on NVDA, which was a roll-up trade. We had puts on ARM, okay? So right off the bat, what I noticed here is that the put premiums were giving a lot of value, okay? The trades that we had here in terms of my ARM puts and all of that, my Tesla puts, based on my pricing, they should have been a lot higher. But that was giving me an idea as well, because since SPX was near my estimated weekly low, that told us that the market wasn't going to break down. So that's the first cue that we knew right away. And by the way, these estimates are given way before the market is open. Okay, so if you look at my market sentiment report one last time here, you can see time sensitive. It was on the 31st at 6 o'clock. That's when we gave it. And that's before the market trading open. Okay, so I noticed that the values, we've seen NVIDIA open down 2.5%. We should have had more, okay? So because we didn't have that, we decided to sell it right off the bat, and that was a good call based on that. ARM puts actually went a lot higher. So if you look at ARM puts, that was actually went to 100%, but because I wasn't so happy about how the market was, we decide not to sell them early. They actually went to 3.5, so that would have been a bigger trade. So we got these trades on April 1st, and we sold them all today here. Okay, so this is our tracker, just so you guys know as well what we did. Okay, now besides that, as you guys can see, and I definitely did call this out on the morning market update. We said 51.90 is our estimated low. We were off by around 5 points so far. You can see that the market managed to hold that number. Another massive call out that we gave as well was on Tesla. We said that if the numbers come in bad, you're likely to see Tesla hit 165. Now, 165 was a strong support. It was off by 2 points. From there, you can see that the bottom wicks pretty much held that. But overall, numbers were key, and we got that right on the money. ARM, basically, the whole process of this trade here was that we got into the puts near the top. Because level 1 bullish represents a gatekeeping level here, and we noticed weakness yesterday, we decided to get into these, and it bounced off right off our level 1 bearish here. So you can see that our inflection points are high level, and they're given to everyone at the beginning of the week. Okay. You can also see here that coin pretty much was not able to break above 248, but maintained 235. NVIDIA here, so interesting play on NVIDIA. So we had NVIDIA calls here. I actually mentioned in my free Discord that NVIDIA was likely to hit 946 here. Okay, so this was 952 in the morning. We mentioned NVIDIA can have a gap fill to 895. It was at 882. Okay, so 882 was a strong inflection point here. The market wasn't breaking down, so we knew that off the level one support, it was possible that it will climb back up, and it did exactly that here, and exploded. But the problem here for NVIDIA calls is that my key strategy when I had the NVIDIA calls, which we sold at a very small loss here for $350, is it was meant to be a scalp, okay? And during that time, NVIDIA actually dipped lower. So I noticed weakness, decided to get out. But if I had held these, I would have made or had the ability to sell at around 6 and make around $2 off that play here. But regardless, we still managed to have a very profitable day here because we had UNH puts. That was the biggest play here. Okay. Now, the reason for UNH play here that we got, as you guys can see, where did I call it out? Okay, so UNH, we called this and said it can work for small accounts as well. Reason being here is that we know that there's basically negative news in the healthcare sector with insurance coverage. So we knew that right off the bat. I kind of shared that in my morning call. The healthcare sector looked pretty bad. So we taken that play. UNH actually gave more than expected. So those puts, a lot of people wanted to hold because they know the news. We discussed that during the live trading session, which I trade for market open to close. This actually went to 450. We sold at around 455 on these puts here, but nice win off that. Okay. Another thing that we also had a nice win off was our SPX put that we basically banked around 34%. We could have swinged that as well. But we pretty much got that because SPX was near our estimated weekly low, and we wanted to make a quick profit here. So didn't want to hold that long here. Okay. So awesome day here. We had, not only did we get rid of all our puts, we are now in a good position. We had our Tesla puts on the numbers. We sold those. We had NVIDIA puts that we sold. We had ARM puts that we sold. NVIDIA, we got rid of that as well. UNH and SPX call as well. Okay, so me being as a trader, I'm able and capable of trading both sides, and I'm also good at analyzing the news. So if you guys need this as this assistance, this model will definitely help you as well. Okay, because with all these levels that I'm providing, it helps a lot of traders because you can see the key inflection points that hit, and when you hit these levels, you can pretty much get ready to do a trade or not, depending on the key circumstances. Now, because we did very successful, I hope to keep this track record going, and I want to make sure that I do this on a daily basis for every trading day that we do these post-market recaps. Now, the final thing I want to go over with you guys is basically what's to come going forward. Now, the JOLTS job opening came in line pretty much as per expectations. FOMC member pretty much said 3 rate cuts this year, which is in line as per expectations. Tomorrow we got the ADP non-farm payroll reports and Fed Powell. Okay, now overall, the sentiment can of course change with Powell. Okay, that's kind of obvious because if Powell gives any sort of new source of information to the market, let's just say he mentions that no more balance sheet reduction, or let's just say if he mentions that it's not necessary to do any rate cuts, that will cause SPX to go back down and probably break through my estimated weekly low, because I pretty much mentioned here that if my estimated weekly low breaks, you're likely to see 51.62. So we can definitely break lower. But overall, my sentiment is that I believe that the market, on a technical basis, and assuming that there's no negative news that may be on the horizon, that the market is likely to go higher. Pretty much because we held my estimated weekly low. The market did not break below 51.90, so it's very possible we could see a retest at the 50-day moving average on the 4-hour chart, which is at 52.30 here. Okay, all these levels that you guys see here, it doesn't have to do with any chart indicator or anything like that. These are purely off option premiums that I use to analyze this. Okay, so I am feeling bullish, and I think that the key stocks that'll probably move the market, probably, as you might see, a rebound in banks, and you can see some semiconductors move as well. So LRCX, ASML, these stocks may make a nice rebound back to the top here again. Okay. Now, I hope you guys enjoyed this quick little market recap. There's a lot of content coming besides just market recaps. We're going to be doing a lot of teaching methodologies, processes, and key things you need to know about to fulfill your trading journey. So thanks for listening and tuning in, guys. I'll see you guys in the next one. And like always, let's get that money.